Readiness is an important part of the approval process. So there are certain criteria and guidelines we like your credit to be at to see maximum, minimum approval amounts. So if your beacon score is technically above 680 where we want to be at, we want your TDS, which kind of stands for total debt ratio. So a total debt ratio is what we take your income, we take your monthly obligations, plus the new monthly obligations of your home you're looking at buying, which is going to be your mortgage payment, property taxes, utilities. We want that to be around 44% of your income. And the reason why the banks want to be able to do that is we want the extra 56% to be available just in case you might need it. We don't want you to be house poor for sure. So if your beacon score is above 680, we can go to a maximum 44% of your TDS. But unfortunately, if it's lower than 680, we want to be at 42% of TDS. And these are just Bank of Canada guidelines that we take a look at. We also look at something called GDS, which is your gross debt ratio, which is just technically the housing costs that we talked about. So the housing costs, once again, is just your mortgage payments, your property taxes, and your utilities that technically could be part of the home. We want that to be, once again, if your beacon score is around 680, we want that to be around 39%, which is the maximum. Now, if your beacon score is less than 680, we unfortunately can't go more past 35%. When we say someone has a beacon score of 680, it just means to the bank that 1 out of 680 people will most likely default on a loan compared to someone who might have a beacon score of 700. So 1 out of 700 is less riskier to the bank compared to 1 out of 680 or even 1 out of 600.